Good morning to all the great turkey and Thanksgiving. It has come and passed us by, and Santa Claus is around the corner. One of the things that we are going to show here, this is a 119, 2013. It is 1100 put, 1000 contracts traded. They don't move a lot, but we can see where the volume is, and we have bids out here at 50 cents. The reason why we're buying below the market, because if this fiscal cliff goes off in the month of December or January, these things down here at this price level have very little risk. There's always capital risk, but our risk is minimized. Considering when I go look at a daily chart on this $1,100 put that has 11,000 open interest, we can see that these contracts were up here in ranges of around $2, somewhere up here around $3.50. There was a time back in 823 that they were $10 a contract on this. And we are buying them for one reason. They've never been this cheap. It gives us a way to be involved in the S&P over the next couple of months at a very discounted rate. That block was bought in one purchase at 60 cents on 1,000 put contracts. Somebody is expecting it to go down big. So when I go over to January and I look at the various put sides, I've got 1150. Open interest is 22,000 there. 38,000 of the 1200s. These are things that we've been looking at, but we only buy them at the very lowest level. And we got 42,000 open interest of the 1450s. Of course, these contracts are very expensive in that area. However, we are looking at January puts, even down here at this 1220, because all of these put options on the S&P are at their lows since we've had the 4-day Thanksgiving rally. These were up here at $5.50. And here, I'll just throw them in the level 2 so people can get a little bit more understanding about this gift of the 1220 put. Here it is, 230 by 310, 340, 270, 275. They were $8 up here last week. So we are going to be getting lower prices. We're out here to buy at $1.10. But nonetheless, we are taking all the capital risk out on that entry. Should the S&P want to dive back down toward 1,300 and Congress doesn't do the thing, it's going to give us the opportunity to get some of these put contracts. Here is another one that has been purchased. It's 1160 put, $1.65. Open interest is what we look at. The open interest is down here. This one, not a lot of people have bought that one, but still the total open interest is 19,000 contracts. Okay. One of the other things that we look at is that 2013 January trade is that the way things look is that it gives us the opportunity to buy these at all-time lows. Kind of like we did with today's expiration. And we did. So, once again, it's about finding the deals and what would happen in calendar 2000 January 13. Like they say, the old myth is, so goes January, so goes the whole year. Well, and here is one that I want to show people. And the reason why I want to show people this, it's a December 1,000 put. 160,000 contracts are open here. And it's a 1222 $1,000 put. They're 5 cents by 10 cents. But my point of it is that the open interest is that a lot of them are woodshedded. Here's a 1050 put. Look at these are all December 22. Look at these, 5 cents by 15. But look at the open interest. The open interest is a conviction of the big money getting on the put side of the S&P well below the market. And here's a 1300 put. 2,300 traded today, but look at the open interest here. The open interest is 181,000. Okay? That is where the big money for January is going. And we get to buy them cheaper than they did because we know what we're doing. Here, the 1275, 106,000 contracts. Here, for January, the 1350 put. Let's put that in here. 4,400 traded today, marked down. Look at open interest, 149,000. That is what they're doing. And let me show you another thing for December now. 232,000 puts traded, 5,600 today. Look, I can even bring up the daily charts and throw them in here. I'll be happy to do so. Because once again, when we take a look at this here, here's where the puts were. They were up here at $60. They're down here at $21. I get to buy them cheaper. During this Thanksgiving holiday rally, they're bringing these down to levels that I can participate in. I am not buying 1 day, 2, 3, 4, 5 days ago. These were up here. If I'm buying, there were 60. If you own 10 contracts up here, it was $60,000. If you own 10 contracts down here, it's $21,000. That's about $40,000 difference in capital risk dealing with the S&P 500. Look at here. This is one that we like. Here's another one that we like. That's the big open interest one, though. And I can tell you right now, here's another one. These are deep in the money. We're not going to touch those. But we'll start at the 1,400. S&P has rallied up because it was oversold. That gives us a chance to lock and load. And once again, we do this before the fact, not after the fact. Then we're going to show you the money that's made. Then you're going to want to be here. And you know that you need to be here, okay? Because risk management portfolio is understanding both the bear and the bull cases and these open interest cases in the S&P 500 index options. We're going to have special training courses, 5 days, starting at $995 for 5 days. You get to come and spend 5 full days with me. And you get to get some of the entries and some of the exits. Here, 200, look at this one here. We really like this one. It's a 1250. Look at it marked down to $1.05. And the thing about it is, yes, it's a put chart. Yes, these things were up here at $100 a contract, $92 a contract. Yes, they've got them down. And let me tell you, it's been my experience that if they don't do the fiscal cliff, what could be the rude awakening, this side of the market is so cheap to have that risk in the S&P with the fiscal cliff well below the market that you have to go that way. And we're doing exactly what we should do. Going in and buying these things. I like this contract right here. It's a 1250 put. I've got bids out here at 50 cents. Yeah, 50 cents on the December one, December regular. Okay, January ones, well, they're going to increase in volume. That's this January 2013. You can see the open interest tree is not nearly what it is for the year-end trade because people have been buying these all year. So, December 31, there's 15,000 open interest only. But let's just take a look at where they were. This was way up here at $60. They're down here at $26.40. This is right December year-end. And I'm going to put this in our market minder because this is one that we get to buy wholesale. And trading the S&P 500 index options, we also trade this NASDAQ 100 index options. And that the movements up today are very, very low half-day volume. So we will take advantage of buying all of these various different strategies that we get to participate in at the very lowest level in the year-end trade should Congress not do anything next week. And I can tell you one thing, you always want to have that side of the market based on wholesale entries so that if it fails, these wholesale entries can go all the way back up here to $60. That's a $1,400 put. And we're trading at $1,403 on the S&P right now. And we have more than a month in that monthly expiration there. So, once again, it's about getting below the floor at the very cheapest prices. There's a $12.75 put that people are buying. This one we really like, the 1350, because there's 680. There's 4,700 of them traded. We're trying to buy these at $3.50 before the fact, not after the fact. And it's a monthly expiration. And here is the chart. We're at the lowest levels 1, 2, 3, 4, 5 days ago. They were at $30 a contract. So if I'm buying 10 contracts at $3.80, my cost is $3 or $3,800. But the people that had 10 contracts at $30 was $30,000. I'm saving $27,000 in my risk entry. I think it would behoove you to take that 5-day course at $995 on the S&P 500 index options, how to get the lowest entry possible for the fiscal cliff. Do yourself a favor, take advantage of it. Get in here. Contact us right away. There.